At the June 14th FOMC meeting, the Federal Reserve left the Fed fund rate unchanged after a string of 10 straight rate hikes, taking the rate from 0 to a current level between 5 and 5.25%. Now, the message from the Fed was pretty clear. The meeting's inaction was a skip and does not mean that the current hiking cycle is complete. The Fed's dot plot, which maps out policymakers' expectations for where they believe interest rates are headed, now suggests a continued rise in 2023 up to 5.6% before they're finished. U.S. two-year yields seem to take the message at face value, trading up to a three-month high of almost 4.8% before giving back some of the move. Now, interestingly, the futures market pricing seems to disagree with the Fed, but the discrepancy is not as large as at times in the past. The CME FedWatch tool now believes that there's an over 75% chance of a final quarter-point hike at the July 26 meeting, and that rates will plateau between 5.25% and 5.5%, with a very slight chance of an ease before the end of 2023, but then 125 basis points of easing before the end of 2024. Those possibilities have been refuted strongly by the Fed. Now, if a trader believes that two-year yields could continue higher from here, they could express that by buying the July CME Micro two-year Treasury yield futures contract at 4.62 and target a move to the early March highs of 5.00. A stop for this trade can be placed below at 4.42. This trade can make $380 if the target is reached and risks $200 if you're stopped at your level. Now, if a trader believes that yields could fall from here, they could express that by selling that July CME Micro two-year Treasury yield futures contract at 4.62 and target a move to the mid-May lows of 3.80. A stop for this trade could be placed above at 4.92. Now, this trade could make $820 if the target is reached and risks $300 if you're stopped out of your level.